Greetings, members one and all of the Salivation Nation. This is an article that is actually very encouraging, I think, as this opinion piece by Steve St. Angelo from silverseed.com. It gives us some insight as to the amount of folks out there who have really kind of woken up to the financial realities, and also the fact that gold and silver really are money and are the best ways to preserve wealth and protect us from times of economic instability. And this article goes on to explain some of this. We're going to kind of take a look at it and analyze it, but also keep in mind kind of the source and sort of what's going on here, because we don't want to that's the one thing about gold and silver. I believe they sell themselves. But we can take the information that's provided here, and I believe that we should consider it. And I believe that there's a lot to be thankful for, and that's something that has essentially brought about a negative effect on the economy has turned out to be a positive thing, considering the demand for these precious metals among those of us who want to preserve our wealth. So let's explore here the staggering amount of gold and silver investment since the 2008 financial crisis. Now, you saw me use the word investment here, and this is where I fundamentally disagree with the author here, as I don't see silver and gold as investment. Silver and gold are money. And money, by its very nature, is not an investment. It is something to be used to invest. It's a tool for investment, and at times. But really, the metals themselves and why we hold them are to preserve our wealth. They are hedges. So let's explore here. While the demand for precious metals is certainly off its highs from prior years, investors will be quite surprised by the astonishing amount of physical gold and silver acquisition, we'll say, since the 2008 financial crisis. Only by comparing the gold and silver investment demand on the prior decade can we truly understand how the precious metals market has changed, and probably forever. And I'll even say, go take it a step further, that if there is another financial crisis on par or even worse than the prior, I believe we'll see even more people wake up to the reality of precious metals and what they do to preserve our wealth. And there's something that the author talks about with regards to sentiment and the disillusionment, and at times the outright disgust by a percentage of former gold and silver, quote, investors. And focus on the inability of these individuals to connect the dots in regards to the disintegrating global financial Ponzi scheme. And we know that really, in a sense, anytime people print currency or create money out of thin air, essentially that is kind of what it's referring to, the derivative markets and the like. I think that's what he's referring here to. You can't just print gold or silver. However, you can mine it, and they've done a lot of that in recent years. And then it goes on to talk about the crypto miracle. And but the emphasis here is that it leaves a part of the reason that once precious metal bugs have now become quite frustrated is that they've been taken by the mainstream financial Kool-Aid. In other words, and I think that's something that is something seriously to consider. Most people think, well, hey, the stock market's there, and you can make a lot of money. You can make a lot of money in cryptocurrencies and the like. But the realities soon will come to a rest on those, regardless of what the media say, financial or otherwise, about how things are going. There are times of economic downturns and times of economic progress. And I believe now we're living in a time of economic progress. And most of us feel like, hey, if another thing hits, we'll get through it, and we'll power on using the current system and the way things are. And yes, I think there's nothing wrong with having some faith in how things are going, and that we will recover. I believe it's good to be optimistic, but at the same time, it's also good to be smart and to protect yourself in case things don't recover like they have in the past. And he goes on, because of that, because we've seen things here, stocks and real estate prices have been going up and up, and until recently, for the past 7 years, while the metals peaked, declined, and have been virtually flat. It's frustrating to see the value of precious metals underperform in the market while everything else seems to be heading towards the moon. But that in itself should give anyone with a decent amount of intellectual know-how that the ability to sniff out that something just ain't right. And really, that's just it. Everything is kind of in a bubble. Now, we've heard talk about that, and it's an artificial bubble for some things, especially when you have all this liquidity pumped into the market out of thin air. With all these precious, with the bailouts, and a lot of people think that the stock market is artificially stimulated, and sooner or later it's going to crash and crash hard. The inability to see how the debt, derivatives, and leverage have created the biggest global Ponzi scheme in history will create the largest financial collapse ever witnessed, causing most investors to go bankrupt. It's only a matter of time, and time is running out. And I'll pause there to say that, yes, I believe in a sense, especially with 3 rounds of quantitative easing and essentially the same types of activities occurring around the world and other governments to the same sort, all this artificial stimulus is kind of what I refer to it as, because it's only the appearance of it's a quick sugar high. But in recent years, we've seen something happen where real manufacturing jobs are coming back, especially here in the United States and in some other countries around the world too, where they've seen some improvements, real improvements on top. So when you see real money being essentially being recirculated and stimulating the economy on top of a sugar high that's still kind of continuing on, something's going to give. But perhaps where Main Street is starting to make some progress, where Wall Street is still in this inflated artificial bubble, when that goes down, how much effect will it have on Main Street? That's where we have a little bit of hope that perhaps the next crisis won't be so bad. We shall see. Ultimately, the author feels that time is running out, and when he writes about gold and silver, he's saying that he doesn't want to see 1,000% gain in the metals, but because there really isn't much else worth owning as liquid investments. When the fat financial lady sings, he doesn't focus on price targets and timelines because it's a fool's game. But my thing is how will the emotions play out when there is a next stock market crash? Can we get to a point in this country or any other country around the world where we're not so focused on what the Dow does or what the financial markets do on Wall Street, in our case here in America, but what goes on Main Street? The guts of the economy, commerce, trade among nations and among each other. That's really what the bottom line is. And we're seeing some of that start to come into a rebirth here in the United States. And my hope is that will continue around the world, and that will protect us as well as having gold and silver. So I'm not necessarily as gloom and doom about what could happen, even if the stock market crashes, or falls dramatically, which it has gone through a seesaw effect. But during that seesaw effect, when it's volatility in the markets, we still see unemployment at record lows for many, and people are working again, and real jobs and wages are going up in spite of what the markets do. But that being said, I think there's a little bit of hope here. But he goes back in history, says that the 2008 financial crisis was a game changer. We focus on day-to-day news. We tend to overlook longer-term trends. While short-term information is important, it doesn't override longer-term fundamental trends. And in some cases, take the collapse of the Roman Empire as an example. It cannot be attributed to just events that occurred over the last few years of the empire, but instead the centuries it took for its falling energy return on investment to destroy it within. Keep in mind the Roman Empire, it kind of evolved into the Byzantine Empire of the East. And so it didn't just fall at once, but it kind of evolved into something else. And that something else did kind of take root and start to go back to real money. It had a coin that they had a gold coin that they kept the purity of, that was used. That was the foundation for money for many, many years in the Byzantine Empire. According to some of the best industry sources, the World Gold Council and World Silver Surveys, investors purchased 16,200 metric tons of gold and 57,800 metric tons from 2009 to 2018. And that's the focus of this video, is that we're seeing kind of a resurgence to real money, just as the Byzantine Empire did during its heyday and its success as sort of the continuation of the Roman Empire in the East. Look what's going on. People, you and I, we are acquiring gold and silver. Look at that chart there. That turns out to be 520 million ounces of gold and 2 billion ounces of silver. And they represent the physical bar and coin market. It didn't include the ETFs or similar products. There's no way of knowing if the gold or silver is oversubscribed to these precious metal ETFs, or secondly, if all the metal that is listed is contained in the vaults. So the figures are likely much higher, especially in silver, for, well, the derivative market of precious metals. But comparing the total amount of physical gold and silver investment to the prior decade, we can see a significant difference. Look at that, 57.8 compared to 15.3 from 1999 to 2008. Look at that, 39.65 metric tons during this time period compared to, 16,200 metric tons. A vast difference, amazing. Total global gold physical investment from 1999 to 2008 was 3,965 metric tons versus 15,300 metric tons for silver. If we put that information of both these charts into one, investors purchased 4 times more physical gold and silver after the 2008 financial crisis. This is staggering, amazing. This is people waking up. And still, considering that, even as such, there's so much more silver, especially if that's used for industrial purposes, than, quote, investment or hedging purposes, which is I prefer to call it. But look at that. This chart tells us something. This should give us hope, folks, that more and more people are waking up. And it really encourages me on this channel to see new stackers and new people come to my channel that just started a month ago, just started 2 weeks ago. I just bought my first roll of 20 silver eagles. Amazing. And here we are in essentially a flat market where there's not a lot of excitement in the precious metals, and people are coming on board because they're learning from history, because they know, they understand the fundamentals of gold and silver. They sell themselves. They preserve wealth in the long run. They're going to have periods of downturns, and you can use different metrics to measure this or that or whatever. Silver is an excellent hedge against economic instability. It is a safe haven. Gold is the ultimate safe haven. It is less volatile. It is there to preserve and protect us in times of instability in the financial world. It is a way for us to be able to protect ourselves, to empower ourselves financially. Gold physical gold investment jumped 4 times. It goes on with the numbers here. Last year, gold investment was 1,090 metric tons versus 3,890 for silver. Yes, it's true that physical silver investment demand last year was much less than the 6,090 metric ton annual average from 2009 to 2018, but silver's price and demand are much more volatile than gold, as I mentioned. Physical gold demand is still quite strong and is nearly 3 times higher than before the 2008 financial crisis, which means savvy investors continue to acquire the yellow monetary metal, even though 99% of the world plays into the grand global casino. It should say something about the strength of the precious physical markets demand, with less than 1% of the market participating. Less than 1%. What happens to gold and silver demand when central banks are no longer able to prop up the financial and economic system? Please understand that it's a matter of if. That it's not a matter of if, it's a matter of when. And that's kind of the key is something is going to have to give in this system. And I do agree with the author on that. How that will evolve, I'm not sure. What will the next era be? I believe they're going to try one more time to prop up the dollar or fiat currencies, and they'll probably use blockchain because that's where the technology is going anyway. And since cryptocurrencies are pretty much decentralized, they're going to use that to their advantage, and they will find a way to centralize some of them or work off of the checks and balance of the decentralized system. But really, ultimately, in the end, it's gold and silver. They're going to be the ultimate safe haven and protection, even if they're tied to cryptocurrencies. So it's quite interesting. I think this is a great report by Steve St. Angelo, considering I may disagree with maybe how the next phase will be, or that there's going to be an apocalyptic type of scenario. But by and large, I think this tells us something. And this also is a foreshadowing, in my view, of what's to come when the next financial crisis hits. Keep in mind, folks, there's a lot of gold and silver being mined out there. And especially since 1900 to right now, exponential amounts of gold and silver being mined. Some people feel that we have passed a peak production of both gold and silver, but it's not by much, because you take into account the production of gold and silver in 1970 or 1980, 1990 compared to now. We're a lot higher. There's a lot of it around, but there's only 1% of the market that is involved in precious metals, at least in the physical form. What happens if there's 2%? And I believe that is a very real possibility that after the next financial crisis, and I also do believe it will be global to a point, which will have a resounding effect on the markets, and the demand could increase another double. It could double, and that's kind of a strong statement. But you think about it, 1% compared to 2%, that's still not a lot of people compared, obviously percentage-wise, 2% of the market compared to 1% now. But if it doubles, then I think we could see the prices for these metals finally come somewhere near the value of them. And that's what I have always been saying, that I believe that the true value, you and I understand the true value of gold and silver. The general population does not. But that value will soon come to be fully realized only after, people recognize gold and silver, like these central banks do, like Russia, China, but the whole population's got to get there too. And when I say the whole population, I'm not just talking about Indians. Indians, they have it as part of their culture, but they're essentially, the price is somewhat protected to some extent by the rest of the world, which is still a heck of a lot of people, and they acquire it not necessarily for financial reasons. It's a cultural aspect. Same with Chinese, and many times, but they understand the value of it as well. Much more so than the average lay person or those who are involved in the financial markets. I've always been bullish on gold and silver for that reason alone. One of these days, they're going to have their day. And for those of us, we will continue to accumulate. And I believe that as we do so at our own pace, we will sooner or later realize and see that these metals will protect us. And if not, for those who are older in this generation, you're going to be leaving a legacy to your children and the next generation. Because as you pass these metals down, I believe that perhaps in that next generation, we will see the true value thereof realized. And I think that's a matter of perspective and keeping things, considering all the factors that come into play in terms of silver and gold production and how much it's gone up, population increase, and its value and its use, not only in the in industry and technology and the biomedical fields, but also as it is in money. So there you have it. Post your thoughts below. I think it's quite interesting and fascinating and encouraging to see these numbers and where they have gone because of the last financial crisis and where the next crisis will come and how they will be even more. And again, as an encouragement, any of you out there who can essentially share the word about precious metals, gold and silver, I think that's sort of what can help us, because the more people that accumulate gold and silver, the more it empowers us and the more shows that we were right all along for so many years. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, share, comment, and subscribe.